and welcome to our look at the Monday, September 1st trading session. In front of you is the economic calendar for the day, and the first thing that you need to be aware of, and this is probably one of the most important things to know, is that we have Labor Day in both the United States and Canada. So we are looking for almost no action later in the day, but that's not to say that there aren't some things to pay attention to. Asia really doesn't have much, but as soon as we get to Europe, the German GDP numbers come out quarter over quarter, anticipated at a negative 0.2%, and that should be a driver of the DAX and the euro dollar. The worse the number is, the more likely the euro falls, and quite frankly, it's not sitting at support anyways, so we kind of anticipate the euro dollar falling either way. Even if the number comes out better, we think that any rally will probably be sold all the way up to the 133 handle. But in the DAX, a poor number might initially cause a knee-jerk reaction to the downside, but then later speculation that perhaps the ECB will do quantitative easing, which normally is good for stock markets. On top of that, the DAX made a pretty supportive hammer-like candle during the day on Friday, so we kind of believe that the DAX is probably going to go up regardless. That being said, that number will affect the markets as such, and the manufacturing PMI numbers anticipated to come out at 52 for Germany as well will have a very similar and almost identical effect on the markets. Will affect it in the same way. Over in Britain, we have manufacturing PMI numbers anticipated to be 55. Quite frankly, this is going to be one of those deals, the better the number, the better the FTSE does. The better the British pound does. The worse the number, the worse they do. If it comes out anywhere close, it will probably have very little in the way of effect. And one of the reasons that I said that is the FTSE fell and found support down here where you would expect to see on Friday and formed a nice hammer. Biggest problem though is we have several resistance areas. It's really not until we get to 6,900 that we're free and clear. We think buying on pullbacks might be a good way to go, but to buy just simply on a break higher might be kind of difficult. The British pound is trying to form some type of base, so if those British numbers come out better than anticipated, anticipate a move to the 1.67 level. 1.65 below has been massively supportive. I don't think we'll break below it. Looking at the euro dollar, you can see that the euro is absolutely, completely broken as we close at the very lows of the day. However, 1.30 is the next significant support level. So at this point in time, we think that there's really not anything along the lines of serious support underneath to keep the market up. If we do rally on better than anticipated numbers, I don't see the market going above 133, so either way, it looks like a nice selling opportunity. And over at the Xetra DAX, you can see what I was saying earlier about how the market fell, but found support down here around 9,400 and turned things back around to form a hammer. I do see resistance at 9,600, but nonetheless, this does look like a market that's trying to go higher. If the FTSE gets good news out of the British numbers, then you can see that it may just continue the uptrend. And again, the Americans and Canadians will be away from their desks, so even though like Forex markets are open and such, I would anticipate the market's just absolutely sitting still, probably once we get to the end of the day for British traders. And with that, I've looked at the Monday, September 1st trading session.